Hey guys, what's up? Welcome back. It's the weekend here, so I just thought I'd do a quick video update. I want to do a bit of a recap on what happened with the trades that I'm in last week, talk about what I'm going to do with those going forward into the week ahead and why things might change a little bit there. And I just want to do a bit of a market recap in general, talk about where we're at with likes of risk and sentiment, etc., and what I think might happen going forward over the next couple of weeks. So before I get started with that, guys, if you liked the video, I'd really appreciate it if you'd hit like and subscribe down below. And if you have any questions or any comments for me, I'd be happy to try and answer any of those in the comment section down below too. So if you watched my last couple of videos, guys, you know I've been doing battle with the Euro Australian dollar for the last couple of weeks now. In particular, if you watch my last video, you'll know I made a pretty big mistake at the start of this week, where things started to work out with this trade. I got a nice running P&L. We had some nice profits on the board, and I made a huge mistake where I should have taken a partial, and I didn't. It cost me probably the whole of last week. So go back and have a look at that video, and you'll see what I did wrong if you want, guys. But essentially, yeah, that mistake cost me, and I ended up losing a little bit of money last week, down about $150. It's nothing major. It's not the end of the world, guys. I'm still working with this trade, and I'm planning to work with this trade, going forward now. So, it's just about managing my risk and managing, the trade, and hopefully, eventually when things work out, we'll make a lot more profit than sort of $150 in this. So in the long run, it won't really matter. I'm looking for some big targets on this one, guys. Eventually I'd like to see it up here around 166, and then even up around 170 if we can get up there eventually. So it is going to be a long-term trade, hopefully. There may be a reason why it won't be a long-term trade, but I'll talk to you about that in a short while. But yeah, for now, I'm just thinking, just got to manage this, see how the next week plays out, and hopefully we can start to get the ball rolling on this. I was doing a bit of sort of analysis this morning, looking around the other charts to try and see if there was anything else out there that piqued my interest at the moment. And at least on paper anyway, there's nothing really else out there that kind of gets my interest and makes me start to think about getting into a position, except for Aussie dollar short. I'm pretty certain, after having a good look around this morning, I'm pretty happy with the fact that I still want to be short the Australian dollar. So I guess it's a good thing that I'm already in it. There are a couple of other Aussie pairs that pique my interest as well. Pound Aussie is one that looks kind of good for a long, around about here. We're coming up on big moving average here, poked out of this trend line here, but I think we're coming up to a decent level as well down here. There might be a little bit of room for the upside on this one. The only thing about this is kind of has a bit of a negative risk factor hanging over it this week, and that's the fact that we have some crunch talks going ahead this week between Britain and Europe on Brexit. So there could be some volatility in the pound this week because of that. So it might be a difficult one to trade, so for now I'm happy with Euro Aussie. And what else was I going to say? Oh yeah, so emerging markets is one that kind of interests me as well at the moment. There is a couple of positions here that look okay for a long, but for my style of trading it's kind of difficult because like for instance here, Euro SEK long looks good up around here. Let me just change this chart here. So yeah, there's a kind of a big level here. We've kind of come back and down from the crash highs, and I'd like the Euro long in general, so I do like it around here. But it's one of those things where you need to kind of trade this and kind of get in and out quickly. If you do end up in a trade in exotic pairs where you end up holding it for a long time, you can end up paying a lot of money in swap, because the swap's quite expensive on these pairs. So it's sort of something that you want to only do a short-term trade in, or else you want to go short. If you go short these pairs, you get positive swap, which means you actually earn money for holding the trade. Now I think the swap rates have changed a little bit since the crash. You might have to recheck that. But yeah, in general, when you go short the emerging markets pairs, you do get a positive swap on that, which can actually pay you some nice money if you hold the trade for long enough. But yeah, going long on these is kind of a short-term thing, so just bear that in mind if you are going to trade any of these pairs. So the Australian dollar, why am I happy, to be still short the Australian dollar? Well, there's a couple of reasons. One is there's a news headline here recently about the Australia. This actually came out just this morning. This news was only came out, see here, Saturday. Australian state sees coronavirus surge, strict lockdown. Now, no going out in place, right? Okay, guys, these are only small numbers. They only have a couple of hundred cases down there. So, it's not like America where these are like thousands and thousands of cases. But it's just interesting to me the fact that, they are reacting so aggressively towards such a small number of cases. And I think, in general terms, the more aggressive that you react towards these sort of outbreaks, the more sort of damaging it can be economically speaking, So it's going to be interesting to see how the market takes this when it opens up tomorrow night. The other thing to note is that, of course, Australia is going into their winter now as we come into our summer. So, well, they're actually already in the winter down there. But, yeah, I guess that may end up, maybe causing the outbreak to kind of, be a little bit more difficult to manage. There might be a little bit sort of more of an aggressive breakout down there because, of course, everyone's expecting when we get into our winter up here that we're going to have a second wave, and that would be tied in with the usual flu season, etc., etc., etc. So it'll be interesting to see if the winter effect has any sort of effect down in Australia. In terms of on the chart, looking at the Australian dollar, let me just open this one up here. So you can see here we broke out of this trend line. This is the trend line from the bottom of the crash. We kind of broke that trend line here a couple of weeks ago in the middle of June. We've just kind of been ranging sort of ever since, just kind of going sideways. I was expecting when we broke this trend line and we came up and retested it that we would get a sort of a move back down towards this moving average here. But we did get a move down initially, but then sort of just went sideways for a few days and drifted back up. So, one of the things about the Australian dollar at the moment is that it's very, very closely correlated to the S&P 500. The correlation is like 95% at the moment. You can see here I have S&P 500 and the Australian dollar overlay here, and this goes back as far as the start of the year, and it's pretty much identical. So of course, as stocks are rallying and we're in this kind of bubble in the stock market again, that's having a lifting effect on the Australian dollar, and it's kind of keeping it afloat. So that's one thing to bear in mind with the Australian dollar. But I've just been looking here, and I went on the weekly chart earlier on, and I noticed that we have this huge trend line going back as far as 2013, October 2013, and we're getting quite close to that resistance area now. Ties in with the 200 weekly moving average as well. It's up around the kind of 71, 8 area at the moment. So we're talking about close to 200 pips, 180 pips or so north of where we are now, which obviously I don't really want to see that happen because it would mean that I'd end up in a lot of pain over the next few weeks with my trade, and I would have to sit through quite a bit before things came off. But it is just something to bear in mind, guys, that we do have this very strong overhead resistance here. And I think in the current situation, I think in the current climate of things, it's very unlikely that we're going to see this area broke, anytime soon. So there is definitely sort of weight on top of the Australian dollar at the moment. In terms of the euro, guys, this is one thing I'm not so sure about anymore, and it's part of the reason why things might change with this trade this week. So I'm looking at it. I took a little bit off this trade just before the close on Friday. I had a little bit more in here, closer to 0.4 actually, but some of it was down here, and I just closed it out because it was basically all at break even on close at Friday, and I just didn't want to carry the excess risk over the weekend. So I just closed it out, but I will probably re-add in just here on Monday. But one of the things that I'm thinking about doing is I'm thinking possibly about just leaving this trade as it is now and increasing my exposure to the Australian dollar short through another pair. And the reason for that is because there is a risk with the euro at the moment, and it's all about this euro recovery fund. I don't know if you have been paying any attention to this, but there is a little bit of kind of, it's been widely touted that there's going to be a euro recovery fund, and they're talking about $750 billion at the moment. Now that $750 billion would be, if it got passed by all the member countries, would be a very big euro positive. We'd probably see quite a big move up on the euro after that happens. But I noticed this headline here on Friday: Germany's Merkel EU recovery fund negotiations are rocky. And she just talks about the fact that, things are not exactly sort of going according to plan with the talks about this recovery fund. And it stems from a couple of countries, I think the Netherlands and Sweden, and one of the two countries who have issue with how the money is going to be divvied out and who's going to be responsible for what, etc., etc. So the problem is, if the deal gets rejected, that's going to be a huge negative for the euro, and we'll probably see a considerable sell-off in the euro after that. There is a summit in the middle of July, 17th and 18th of July, where this is all going to be covered. But obviously there's going to be some discussions prior to that as well, and there'll probably be a few headlines here and there. So there'll be some headline risk in the euro regarding, positive news about the recovery fund, or negative news regarding the recovery fund. So we may see some volatility in the euro. Guys, look, I think personally, most likely thing is that it's going to happen, because look, it's best for the eurozone, and I'm sure all the members will realize that, rejecting this deal could be sort of a big economic negative. So I do think in the long term, yes, it'll probably happen. But at the same time, do I want to increase my risk in the pair just on the off chance that it doesn't happen? Maybe not. I don't have that much of a conviction in the euro to do that. So what I might do is I might just put a bit of a floor underneath this trade. I have some stops in here, but don't worry about that. Those stops are just moving targets at the moment. What I might do though is I might put in my stops just below the swing low from May, down here where this one is. I might just put in all my stops there, and I just might let the trade play out. And if we do end up having some sort of negative euro news regarding this, and I get stopped out of the trade, I'll just have to take it on the chin. But what I can do in the meantime is, rather than increase my position in this, I can go into another Aussie pair and short that, and that would increase my average in the Australian dollar, which overall is what I want to do. So the trade I'm thinking about going into, and I know there's going to be one person watching this video who's going to have a laugh at this, I want to go back into the Australian yen. So what I'll look to do is I'll look to find an area this week, and I'll look to try and get some shorts in here on the Australian dollar yen. So what I'll do is I'll do a follow-up video on this, guys, on probably Monday or Tuesday this week, and just show you how things have played out and what I've done to manage this position, and where I've gotten in here. So just keep an eye out for that video, guys. In terms of what else we're seeing going on in the market at the moment, well, it's business as usual, guys, for the last sort of couple of weeks. Risk on, ignore all the risk off. The market just turns a blind eye to every risk off headline. They're ignoring all the coronavirus news. Any economic data that's bad gets ignored. Any economic data that's good gets cheered, and the market gets bought up. Typical bubble stuff, guys. We're definitely, we've reinflated the bubble. We're back in the bubble again. So look, it's going to be a difficult thing to trade, especially if you're contrarian. If you want to go short this market, good luck, because it's hard. But yeah, I still believe that in the near term, guys. Now I'm not going to put a date or a time. I'm not I don't have a crystal ball or anything like that. But I do believe that in the short term, in the near enough future, in the not too distant future, let's say, we are going to see a big risk off move in the markets. I think things are just going to have to come to a head. When I look at what's happening in America, when I look at what's happening with the coronavirus situation in America, I just don't see how that situation fixes itself without some sort of significant intervention by the government. Because what's happening now is the situation is becoming completely out of control. Completely out of control. The numbers are going astronomical. And I think what's happening now is we're going to end up with it's not going to be like the last time where New York was the epicenter. There's going to be several epicenters because Florida and California and Texas and Arkansas and Alabama and all these places where the numbers are absolutely skyrocketing, they all have a situation now where even if they close the tap tomorrow, the numbers are going to still keep going up for a couple of days or weeks afterwards because the infection rates are just, the spread is just so significant at the moment. And they just, look, I know they keep saying we're not going back into lockdown, but you can already see a little bit here and there starting to happen. The bars have closed, they're starting to restrict people doing certain things. The beaches are closed, etc., etc. So they said lockdown's never going to happen. Maybe they won't ever go back into full lockdown like they did the last time, but they've got to make a significant change in what's happening over there in order to, they can't just let it continue to rage across the country because they're the government. They've got to protect their citizens, and at the moment they're risking thousands and thousands more lives. The more they let this go on, the longer they let this thing get out of control. So look, I may be completely wrong on all of this. I'm just looking at this through what I would consider rational eyes, and I'm just saying I just don't see how they can just continue to let the numbers go up because it's just irresponsible. I know they have an economy to protect. I know that things are difficult, and I know that if they do go back into lockdown, it may end up in depression or worse. But at the same time, what is the alternative? Do you just tell people, I'm sorry, we just got to keep everything going like normal, but we're just going to let the virus get worse and worse every day? I don't know. Are people going to do that then? People might change their minds. People might say, oh, I'm not going outside. I'm not going to do this. I'm not going to... Look, you know what I'm saying. You know what I'm getting at. I just think that something's going to happen. And when that happens, that's when we're going to see a sort of a shockwave in the market. And I think, obviously it's not going to happen probably like the last time. We're not going to get such a reaction. But we will get, definitely, there will be something. And as I said, guys, S&P 500... and Australian dollar correlation, do the maths, guys. When we get our sell off here, we'll probably get our sell off in the Australian dollar, and hopefully then my trade will work and all will be good, and then we can move on to the next thing that's going to torture me for another few weeks and talk about that. Other things, guys, in the market, really not a whole lot else. Just one of the notable things is that the US 10-year Treasury bond yield is flat, completely flat. You would normally like to see some sort of an uptick in this if the rally in stocks was to be sort of confirmed, but we haven't seen that. So something to keep an eye on there. But yeah, pretty much that's kind of it, guys. As I said, I'll do a video on Monday or Tuesday this week just to give a quick update and a recap on where we're at. Yeah, that's pretty much it. So guys, thanks very much for watching the video. Appreciate you taking the time, and I'll see you guys on Monday or Tuesday. Thanks, bye bye.